Good evening, everyone, from any time zone you are watching from, or you are connecting from this concert world synthetic. Happy new month to everyone out there, every trader out there watching, connecting to this weekly chart analysis. Welcome to the month of July. The month of July signifies the second half of 2023. That is, we've used 6 months, we are into another 6 months. And as we all know as a trader, that once we are coming into the ending of the year, there's a lot of abnormalities in the market. People tend to pull off from the market, people less volatility and much of irregularities. That's why as a trader, from January to October is the best trading period we can really have to really enjoy good trade and good tiding actually, because these are the time there is more liquidity in the market and there is more flow in the market. That is, we have more trader in the market because towards the ending of the year you have people going on vacation, less liquidity, people trying to round up doing financial projection analysis and breakdown. So one thing I want you to have in mind is it's never too late to make profit. It's never too late to change your decision, and it's never too late to learn a skill and master what you know. 2023 is not yet gone. It's the decision you take now that really determines that go a long way actually. So you still have now till December to master your skill, master your craft, make profit actually. So one thing is, trading is a game of profit. Yeah, although some people terms trading like maybe gambling or something. No, trading it's a business on its own. And as a business, we have to treat it like that on its own if you really want to really make profit. So one of the take home tonight, before we go into the deeply into the weekly analysis, is that you can start taking action right now. You can change your decision right now. Anything you want to do, anything you want to achieve, your goals, is never too late. You can still smash them no matter how big they are or how small they are. You can still smash them. But while putting that in mind, also remember that towards the end of the year, like October, you should already round up from trading, should be checking how your trading year went actually, if you don't want to like have a headache at the end of the year, because during those time you have a lot of abnormalities in the market. And one thing for synthetic indices is those are the time you see, especially for boom, you see a regular spike and all. So one of the things we'll be doing tonight is we will be doing a top-down analysis from January. Sorry, we'll be doing a top-down analysis from monthly down to our 4 hours time frame. Let's see what month of June did. Then what are we looking into for month of July for each synthetic indices. So tonight, God willing, we'll be checking into minimum of 3 indices, then maybe maximum of 7 indices as we go. Actually, good to always have you here, and I know you've been getting a whole lot of value from this video, because these are just how I take my trade, how I analyze for the week. We get to learn, ask questions from each other. And for people who are watching the recorded video, if you want the freemium signal, you can check the link in the description. you receive the Telegram link in which you can join to get a premium signal. And if you also want a premium signal, you can click on the WhatsApp link to just chat me up. And if it is a mentorship, you want one-on-one mentorship, on-site mentorship, or online mentorship, you can just boss me up and tell me. I'm always open. So one thing we should all know is that the fight is not against each other. The fight is to be profitable in what we are doing, to be profitable in this business of trading, to be consistently profitable. And we should not forget that no matter how good you are as a trader, no matter how professional you are as a trader, you will always still lose. Yeah, you have to lose. But one thing that makes us exceptional is our win rate is more than the lose rate. We are winning 3, maybe lose 1, we are losing 10, lose 2. That's just it. So one of the things that give us this edge is preparation, analyzing the market before you get into the heat of the market, before you really sit and, okay, let's start taking a trade. But you want to know the directional bias, you want to know where the market is leading you to for the week. So without being said, let's go deep into what we have for this week. Let's see what the market is saying actually. So let's start from crash 500. I've been eyeing crash 500 recently because I really love the movement it has been showing, and it has been obedient. Actually, it has been an obedient student. So this was last week analysis. Actually, this is a daily time frame line. So let's check what the month of June said. What do we have in the month of June? Let's see. So in the month of June, we have this bearish candle. We have this bearish candle, this long bearish candle in the month of June, which it rejects from this zone of 4,000. So let's have a better view on weekly time frame. Let's have a better view of weekly time frame. So on our weekly time frame, we see that market is buying into this bearish candle, this long bearish candle. Market is buying into it. So when we see something like this, it's a confidence that market wants to do 50% of this. So what do? This is how we start our analysis on crash 500. So let me delete all this trend line. So now what we first do is, this buy is just a retracement. So what do we first do? We measure. Let's measure this candle. Let's measure this candle. Why are we measuring this candle? Because there have not been other block being formed. We only have market break from this zone actually, but it has not formed another block here. And what's another block? As we've established, another block is a bullish engulfing candle or bearish engulfing candle. So now let's measure this candle. We start from here to here. Let's first measure our retracement. So we are expecting market to first buy into this retracement. So we are expecting market to buy into this retracement first. So I'll make this trend line vertical. So we're expecting market to first buy into this retracement one, then into this sell and buy stop. So, but our first major focus is market reaction on this retracement on lower time frame, especially daily time frame. Market reaction on this zone. Then after this zone, we want to see market reaction on this sell and buy also. So let's come to daily time frame. So coming to daily time frame, we see what market is doing. So we even have a better view on this time frame. Let's just do it like this. Since we have a better view here to see the candle, so one thing to have an accurate level. So now using my retracement, one of the things I discover over the week is now to really measure your order block using your fib, you have to start from where the last candle for a buy started. You put your fib there, then you put the end part on where the last red candle, which is the bearish candle, the sales ended. So I'm putting it from the start point where this buy ended, which is a retracement, then here where it ended. So now I'm expecting market reaction in this zone, first in this zone, and you will see that market reacted more as it got to this zone. Market reacted there. You see market reaction there. Then we want to see market reaction on this sell and buy stop. So we see what market is doing. So we see what market is doing. Then now let's come to lower time frame, 4 hours. Now to continue this buy now, we have to wait this for 4 hours order block to fully form. Then once it's fully formed, we can buy into this zone. We can buy into our first take profit will be where 4,400. Our second take profit will be where this area. So we'll mark out this zone. So we'll be waiting for a major reaction on this zone. So now to be buying gradually, you can now measure this. You have impulse, then retracement. You have retracement. So now your first take profit can be here, then your second take profit will be here. As simple as that. As simple as that. So this is how we do it. Show you. Now on 30 minutes, we see that an engulfing candle has been formed. So we see that an engulfing candle has been formed already. So back here, these are our first take profits for crash. So you can take this trade. You can take this buy now. You can take this buy on this crash. You can take this buy. Your TP will be here. Your TP will be here on this zone. So your stop loss will be here. So this is just 1:3. Then you know that your main target is still this area. Your main target is still that area. So as simple as that for crash 500. So for crash 500 over the week, for this week, we are expecting market to buy into 4.5. For crash 500, we are expecting market to buy into 4.5 before we see a major fall. So we are expecting something like this. We're expecting something like this. Then yeah, something like this. Then something like this. So our major focus is just 4.5, market buying into 4.5. So for every retracement, we want to buy until we now reach this 4.5, then we will wash our hand away from this market. So for crash 500, we want to do more buying on crash 500, and we have our major zone, our first major zone, then our second major zone here. So we want to see market buy into this place first, then wait for its reaction, then we wait for reaction here, the market buying into 4.5. So over the week, our major target is market buying into 4.5. Our major this thing is market buying into 4.5. And once market buy into 4.5, then we just wait to see what markets will be doing. So for crash 500, our major entry will be 4.3. Buying into 4,400. We want to first buy into 4,400, see market reaction, then into 4,500. So you can take a buy now. You can take your buy. How do you take your buy? You just, let's say we use this buy, take our buy, then our TP here. So we have TP of $20 TP, then our stop loss. So you can put your stop loss here. So have a good reward ratio. So we are having 1:3 as our risk reward ratio, actually 1:3 for Crash 500. So that's that for Crash 500 for the week. Let's see how market plays out. So any question on Crash 500? Any question? So let's go to boom 1,000. Let's see what boom 1,000 have for us for the week and for the month. Let's see what boom 1,000 have for us for the week and for the month. So we have the chart fully loaded. Let me delete this. So one thing is we want to just keep it simple and just keep it simple. We see an indecision candle here. You see the chart is very neat. Why is the chart neat? So that you can easily see the market and enjoy your trading. Now on this monthly or June candle, it formed an indecision candle. So coming to our weekly time frame. So yeah, we don't really have one major move. We just see the market buy into this 10,300 and started selling down. So let's come to our daily time frame. Okay, coming to our daily time frame. We first pick our fib. Then let's measure. Since another block is formed there, so we measure from this area. From this area to this area. So then we have liquidity here. We have liquidity in which market should sweep. So let's first mark our retracement level for boom 1,000 when we want to first see market reaction. So we want to first see market reaction in this zone. Market has been bouncing this zone over and over again. It has not really break this zone actually. So let's mark our sell stop. So in this week and in the month of July, we want to first see, for this week, we want to see market reaction on this zone below this 10,000. We want to first see market that zone below the 10,000. Then if we want to see a liquidity sweep, then it will come to this area of 9,646. So for this week, our major target will be on this zone for boom 10,000. Boom 1,000, our major target will just be on this zone. For Crash 500, our major target will be on this zone, while boom 1,000. So once they touch this zone, just rest and look into other indices. Now we mark this zone. Let's come to our 4 hours time frame. So coming to our 4 hours time frame, we can now mark our short entry. Let's pick from this one. This is the last sell candle, then this is the last buy candle. So that's where we place it. Then let's mark. You see market reaction on this retracement level. So here we'll mark 3 zone. We mark this retracement level. We'll mark that retracement level. Then we mark this sell stop level. Then we mark this buy stop and sell stop level. Then if you come to 30 minutes, you see market reaction there. You see on all this zone, there is market reaction. You see here, there was market reaction. You see here, there was market reaction. You see here, there was market reaction. Why? Because market is aiming for this zone actually. So one of the things we can do to have a good analysis is you can draw your trend line. Draw your trend line. The market is bouncing on this. So let's see what market do on this zone. You see here, once market reaches, it bounce off. Once market reaches, it bounce off. Once market reaches, it bounce off. So we are expecting market to come to this zone, to sell into this 9,900. So let's see how it play out. Let's see how it play out. Let's see how it play out. It will be a good sweet sell. You see our crash 500 playing out as analyzed. Although once you got to this 100%, you should see a spike down. Then you see a continuation buy. Why this one? Let's come to our 15 minutes time frame. So anything that happens, so assuming here, we can also do like this on this zone. So it makes you to know your impulse level. Another place where market can react. So and you see that on this zone, market has reacted. So let's see what market do here. So if this 15-minute engulfing candle form, that is this red candle fully engulf this green candle, that means you see a continuation sell. So to know where the sell will stop, you can just, apart from targeting our major zone, which is 9,900, you can measure it, bring your fib, draw. Then this impulse area, you're expecting market reaction on that zone. So let's see how market plays out. Let's see how market plays out. So let's come to boom. So one thing I've come to realize that in trading we have to have this uncommon patience. We have to be very patient enough to see how our analysis play out. We have to be really patient enough to see how analysis play out. That's when we really enjoy trading. That's when we really enjoy trading. That's when we get to enjoy trading. So let me mark this place. It has passed this retracement. So we have this buy stop, sell stop area. So let's mark this place, the buy stop and sell stop area. Mark this place. We've marked this place on our monthly time frame. Then let's mark this buy stop and sell stop area. So we are marking two zones. This sell stop and buy stop area, then buy stop and sell stop area, just using our fib. So the major thing we are using is our fib order block, price psychological level, and institutional order flow. That's what we are using. So it makes work easier, not complicated. You don't need indicators at all. This is just pure price action. So let's come to weekly. You see exactly on this zone, you see market reaction. Exactly on this zone, you see market reaction. But we can't use this to judge. What we are now looking for is order block. Now, daily order block has been formed. This daily order block has been formed. Then we see a retracement. So how do we measure this? Where's our last sale? This was the last sale. Then where was the last buy? This was the last buy. So now you see that on this retracement level, you see market reaction. That was why once market sell to this level, that's why you have this rally buy up. So you want to measure this place. You want to mark this zone, this retracement. Then you want to mark this zone. So those two zones would be our area of concern on lower time frame. So let's go to 4 hours. See on 4 hours. So now we are expecting market to sell into this zone. We're expecting market to first sell into this, then we see a reaction. Once we see a reaction, then we can now also sell into this zone. So our first area target will be 3959. This 3959. So if you go to 30-minute time frame, well, we see this sweet sell down. Once it broke this structure, we see this sell down. So market is targeting this area. So we might wait for a spike for a little buy, then we enter a continuation sell. We enter a continuation sell, or we wait for market to sell into this zone. Then we see a spike, then we resell into this zone and into this zone. So let's go to crash 1000. So we've analyzed crash 500 to 1500, then let's go into crash 1000. So for crash 1000, we see this buy up. So this is our last buy up, which is a retracement. So we bring our fib. So we bring our fib from here down to the last, from the last buy to the last sell. Then let's mark our sell stop and buy stop. Mark this zone. Then we'll mark this zone. So currently this will be our 2 area of concern for now. Then let's go into our weekly. You see market reaction exactly on that zone. You see market reaction exactly on that zone. So let's highlight this zone out. So that's one of the advantages of the top-down analysis actually. Then let's come to our daily. So on daily time frame, you see market just sell down, then it's buying up. That means if market buy to this point, we are still expecting market to sell down. So this will first be our area of reference. Here, any buy we want to do, we want it to first exceed this place. Then if another block is formed for a continuation buy, then we can continue to buy to DEX soon. But we don't want to exist this soon before we now really confirm the trend of the market. Because within these two zones, there will be a change in trend of market. It can be this or this. So let's say our 4 hours. So these 4 hours I've showed a 4 hours order block. So one thing we can do is we can measure. We'll measure our last buy. So our last sell. So we'll mark this zone. So we're expecting market to buy into this zone. We're expecting market to buy into this zone. So we'll wait. So you can take your buy from here. You can take a buy from here. Then your TP here. Let's come to 30 minutes. So on 30 minutes, it's telling us that we have liquidity. One thing is we would like to first see a spike, at least a sell down to retracement. Then we want to see something like this. If you are using small accounts, you want to first see something like this, then something like this. So you have to wait for a spike to happen, then you buy. While you can also take your entry here, then your TP there, depending on you. But for me, I would rather wait for a spike to happen, then I will take my buy. You see? So it's all playing out. top lane out. So let's take, which one should we take for tonight? Which one should we add? Which one should we add? Okay, we've analyzed crash 500, boom 1000, boom 500, crash 1000. I'll leave crash 300, boom 300. I'll come to DEX and volatility. So coming from monthly time frame now, see this spike. I do love this kind of candle because you know what will happen. So what do? You just measure from here. You measure the candle itself. You measure the candle itself. First, you mark out the retracement level. And you see on this retracement level exactly, market started the reaction. Exactly on that level, market started. Like, it really respects this FIB. No stress. Just marking out your zone, your area of interest, what you want to see, as simple as that. So mark out this retracement level. Then mark out this sell stop. So mark out these two areas. So these are key areas for us. Then going on your weekly time frame, wow. You see, it has formed a weekly order block. This is a weekly order block. This is a bearish engulfing candle. Then you can measure from here up to this point. You can measure from there up to this point. So you are now breaking it down. Yeah, you see market reaction. Oh. So then here also you can measure this area also. You can measure this area. Then let's come to 4 hours time frame. Now coming to we mark our daily time frame. Then okay, we mark our weekly time frame, then daily time frame. So we can measure from here. There's a market retracing on this area. Let's mark this zone. We mark that zone. So let's come to 4 hours time frame. So you see on this zone, market is reacting on this zone. So let's see what fully from here. If we have this engulfing candle fully formed, then we'll measure, we check this retracement, then we should see a continuation sell actually. So that's all for today. That's all for today for this week. So this week we are looking into crash 300 buying to 4,400. We are looking into boom 1,000 buying into 9,900. We are looking into boom 500 selling into 3,956 region. We are looking into crash 1,000 buying into this region. Then we are looking into DEX selling down to this region. So let's see how far it will go. I hope you've been able to learn something so far. So you can, the best thing to do, the best advice I will give you is to subscribe to this YouTube channel so that you can you'll be the first person to watch this video. Any video being dropped, you'll be the first person to watch it. You get access to it. You can always drop your question. Then for you watching the recorded video who is not part of us here, you can always click on the link on the Telegram group in the description, or WhatsApp to chat me up. I know this video will really bless you this week. Have a profitable week ahead of you. See you over the week. Take care.